Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Anthropic plans to spend $50 billion to build AI data centers in the US.
Plus, data center demand helps AMD shares jump as it predicts accelerating sales growth over the next 5 years.
And Whoop is considering a potential IPO in the next 2 years. According to its CEO, we'll have the details. Okay, let's get on to our top story. Anthropic plans to spend $50 billion to build custom data centers for AI work in several US locations, including Texas and New York. This is the latest expensive pledge for infrastructure to support the AI boom. Bloomberg's AI editor, Seth Figgerman, joins us for more. There are some details worth understanding and knowing about in what Anthropic plans to do with this $50 billion, over which timeline and with who. But there's also some consideration around how big this $50 billion is relative to the rest of the field.
That's right. I think in one sense, if you had said a year or two ago that a 4-year-old unprofitable startup was going to commit $50 billion to an infrastructure project, you said that's enormous and possibly insane. But when you compare it to the $1.4 trillion that OpenAI has committed, it feels much more measured. And I do think that is very much the subtext of a lot of this. Anthropic is clearly taking a page from OpenAI in terms of the scale of infrastructure required to build what it wants to build, but I think it also wants to show that it's perhaps a more fiscally responsible company in doing this in order of magnitude less at the moment.
They've raised $13 billion recently. They're worth $183 billion, and they've had really good track record with business and enterprise sales, 300,000 business customers. But what's interesting is the business they're doing with other people. They're using a UK company to build out in the US, Seth.
That's right. I mean, FluidStack is really not a household name here. I mean, it's part of that emerging sector of neoclouds, but not nearly as well known as CoreWeave or even Nebius. But, it's an up-and-coming company that we've previously reported is in talks for a large amount of funding, and it's been central to a French effort to build a supercomputer over there. But again, more untested perhaps than some other partners you might announce here.
It's one of the stories where it's what we do not know that's worth consideration. So they're not telling us, the total gigawatt figure for the footprint in the United States. And at the same time, they're heavily reliant on these hyperscale partners, Amazon, AWS, and Google, to give them the compute they need away from this plan to build $50 billion of capacity.
Yeah, and I think, again, if you look at their nearest rival, OpenAI, the answer is sort of it takes everything and everyone to build what they want to build here. And so while they want to potentially have a bit more control and ownership over some of the data centers that they build in the coming years, they're still going to be relying on those big tech partners and the neoclouds and pretty much anyone else in this industry to meet what they imagine to be a pretty intense amount of computing needs here.
Bloomberg, Seth Figgerman. It's a great breakdown. Thank you. Look, those intense compute needs, those AI bubble hopes, they're still being questioned by the market, at least on the day. Let's check in on the Nasdaq. It's under pressure by 0.3%, even though we've got some significant movers to the upside in the chip sector. Ed, you're going to get to it. But at the moment, we're still trying to digest potential end to the government shutdown. We're still trying to digest really where some of the AI, return on AI is eventually coming from, Ed.
There are some outperformers, and AMD is probably the starkest example, up almost 10%, more than 9%. They had their basic annual capital markets day or investor day. And what they said is that top line revenue growth is going to be annualized 35% over the next 3 to 5 years. But in that key data center category, 80% CAGR over the same time period. And the question we've asked so many times on this program is AMD meaningfully going to close the gap on Nvidia for AI accelerators or GPUs for data center? The market really likes what it heard. Global Foundries actually had a really strong earnings beat in the third quarter, particularly on the bottom line. Again, another sort of smaller scale contract manufacturer of chips like TSMC, but the stock down 3%. All in all, at the index level, the Philadelphia Semiconductor Index, or SOX, up 1.2%. But there is like this weird kind of treading water right now, bigger picture because of the government shutdown. And AMD, as you know, Kara, is probably doing a little bit to boost at the index level.
It is. Let's just get the context here for all of this and drill down into what has been some cautious optimism in tech stocks. In an end, of course, to the US government shutdown potentially in sight. Nicolas Janvier is with us. He is the head of North American equities for Columbia Threadneedle. It's got a cool $714 billion in assets under management. Nick, it's wonderful to have you here in the studio.
Thank you for having me, Caroline.
And you've got this great take on sort of what the drivers are going forward. You call it tire, but we are still trying to digest trade. We are still trying to think about interest rates. I think you go into what's happening with inflation, but earnings. What are we hearing from earnings to vindicate the AI run-up that we've had of late?
Hey, look, thus far, right, I think it's fair to say that earnings have been really, really good. If you look at the performance of the hyperscalers, in particular, this most recent earnings season, you are seeing a growth and, dare I say, return on some of this CapEx. All you have to do is look at what's happening with Meta, right? When you look under the surface, you are seeing that the AI is enabling better ad effectiveness, right? And those are some of the early things that we want to start to see as investors to validate the spending.
Well, what's been interesting is investors didn't give much of a longer rein to Meta. It was beaten up in this earnings season because they're taking on more debt. They're thinking and committing to that capital expenditure. What do you want to hear from Zuckerberg? Do you want to hear that optimism, or do you want to sometimes hear that he's going to be sensible with the money spending too?
Hey, look, investors are doing exactly what we should be doing right now. We're asking questions. And why are we asking questions? Because, Caroline, even in a world with $100 billion is quaint, right? We're talking about really big numbers here. So investors are rightfully saying, hey, help me understand the pace of the spending. Help me understand how do I think about these returns flowing through? What's the time frame on that? And Mark, do you really need to spend all of this money right now, or should you take your time? Now, Zuckerberg would say we absolutely have to move forward because this is going to matter for the future of the company. And if we don't do this spending, we're going to fall behind. But investors are going to ask questions, and that's precisely what we should be doing.
Nick, it's great to have you on the program. Let me give you some really big numbers. $4.7 trillion market cap for Nvidia. Top line growth overall, 56, 57%. Data center, maybe even better. The E in your acronym, it cannot get any bigger than next Wednesday. How should the market brace for that Nvidia print, either to the upside or to the downside in terms of disappointment?
Look, I know that there is a focus, and we like to look at these earnings sort of on a real-time basis. But what the market is really going to care about, Ed, is how is Nvidia talking about the future, right? Caroline was just pointing out that we've had lots and lots of CapEx commitments. And what investors want to hear is what is the pace of that CapEx coming through their revenues? And look, I know we're going to focus on a backwards-looking view in terms of the quarter, but what we should be thinking about is the pace of their competitive positioning. Are they going to be able to maintain that? Are they going to be able to maintain this revenue trajectory that they're on? And at least in the short term, I think they can.
You're the head of North American equities, right? You probably take a much broader macro view. But when you do have a company like this who's not just technical weighting at the index level is an important consideration, but like the psychological weight that Jensen Huang puts on the market, how do you prepare for that? How do you translate that for your clients?
I think what you have as an investor is focus on the things that you can do best, right? And what is our competitive advantage, if you will, from the perspective of Columbia Threadneedle? What we can do is study the market, understand the competitive dynamics, and be able to weigh through who the winners and the losers are going to be. Now, is Jensen's commentary, is that going to matter for investor expectations? It will, but to the extent it creates noise, I think what we have to do is be ready to take advantage of that on behalf of our clients.
And so, in this moment, if there is weakness, and we have seen some pockets of weakness. Look, quantum's come off. We've had some of the more sort of risk-prone, maybe the unprofitable side of the tech's been pulling back a little bit. Nuclear, maybe we've got less excited about that. Are they buying opportunities, or are you thinking that you actually want a little bit of a healthy correction, as some of these CEOs of financial companies have been talking about?
Hey, look, Caroline, I would segment out the market. I think there are places where there is fundamental strength. And to the extent you see weakness, it's probably a buying opportunity. And I would separate out the places of the market where really what we're talking about is speculative appetite, right? The quantum stocks have melted up thousands of percents. But for most of these companies, they don't even have any revenues for a few years running, right? So I would not necessarily describe that segment of the market as a buying opportunity. But for the healthier places, the places where you can model out real revenue growth, you can see where the cash flows are going, there's probably going to be opportunity as the market continues to be weak.
Opportunity, and I mean, the opportunity we keep hearing about, the limiting factor we keep hearing about is utilities and is energy, but also the key limiting factor for many is going to be the pace of interest rates and where they go.
Yes, let's go to interest rates. So in your acronym, we've done a lot on the E, right? What we always say on this program is that higher rates discount the present value of future cash flows. And we try and help the audience understand, like, why do we track the Fed on Bloomberg Tech? Yeah. As an investor who's looking at this technology sector, why do you look at the Fed? Do you care? Help us understand.
Hey, look, we absolutely care, right? And I'll take you back again to these really big numbers, trillions of dollars that we're talking about. So the Fed matters a lot from the perspective of, is there going to be liquidity in the marketplace? And obviously the Fed, in terms of the short-term interest rates, is going to dictate the pricing on that, on that capital. So yes, the Fed matters. I would point to the audience that there's been somewhat of a pivot. 4 or 5 weeks ago, I think it was relatively consensus that interest rates were heading lower. We're now in somewhat of a data fog, but the little bit of data that we've seen suggests that we might be on hold. So in the short term, I think you're going to see some countervailing winds, if you will. In the long term, you would expect interest rates to start to come down, given what we're seeing in terms of economic performance.
Let's end the conversation by you telling us what's going to happen in the balance of 2025 and 2026 for the technology sector. Your crystal ball, please.
Look, I think for the next few weeks, it's going to be all about investors trying to figure out where are the returns going to come from. Let's look through the tea leaves. Let's see the early evidence that this CapEx is going to pay off. So I would expect that that's going to drive a lot of the conversation for the balance of the year. But I'll pull you forward into 2026. I think an important conversation, and one that we haven't spent a lot of time on thus far, is, are these CapEx numbers one-time in nature? Or are we about to get on a CapEx treadmill, which is akin to telecoms of the 1980s? Right. If it's the former, I think the market will do well through that. If people start to believe the latter, I think you have the real possibility of seeing some nervousness from investors.
Nicholas Jambier of Columbia Threadneedle, great to have you on Bloomberg Tech.
Thank you very
so much. Now, coming up, fitness wearable company Whoop says it's looking to potentially IPO within the next 2 years. We're going to get that story next. Kara, what you got?
In the here and now, Ed, we're checking out airline stocks because we have heard from Sean Duffy, the Transportation Secretary, speaking to reporters saying the US aims to start lifting flight cuts in a week once the government opens. We're up more than 2% across the board. This is Bloomberg Tech. Waymo. It's begun offering rides that include highways in San Francisco, Los Angeles, and Phoenix. The company is also widening its service area in the Bay Area in the coming weeks. It's all offering rides across Silicon Valley more broadly. Bloomberg's consumer app reporter Natalie Lung joins us now. And why is rides on highways such a big step?
It is a big deal because it can cut down trip time for a lot of customers. Right now, before freeway access was available, Waymo had to plan routes, avoiding the highways and, navigating the narrow city streets and lengthening trip times a lot.
Natalie, we were talking with the team this morning, right, about, is this the first time that a genuine robo-taxi service, no safety driver, is going on a freeway or highway and charging a fare? The answer is probably yes. Just explain that footprint in those markets, SFLA and Phoenix area, against what others have or have not yet done.
So opening the freeway access would connect some of Waymo's existing markets like SF down south, down all the way to San Jose and even to the airport. And so this would make them very competitive against traditional taxis and Ubers and Lyfts and make it, not different from regular ride hailing. And compared with Tesla, which currently still have safety monitors in the cars, whether it's within city trips or freeway trips. So Waymo is really the first one that's offering like a fully driverless experience for customers.
So I'm flying into Phoenix. I've got a nice little Airbnb that I've booked, and I'm taking my Waymo to my Airbnb, and now I'm going to be able to get Instacart ordered there as well. You've been a busy reporter. What's happening over at Airbnb with Instacart?
Yes, so Airbnb is piloting this kitchen stocking service with Instacart, where hosts can receive your Instacart order and then pre-stock your Airbnb, and so you can make use of that kitchen while you're in a short-term rental. And so this is a 3-month pilot that will start next year, and Airbnb is incentivizing hosts to provide this service by giving them some cash incentives.
Bloomberg's Natalie Lung, thank you very much. Let's get to another story. Fitness wearables company Whoop says they're considering a potential IPO in the next 2 years. That's according to CEO Will Ahmed, who spoke with Bloomberg's Samantha Kelly, and Sam joins us now. We've been tracking Whoop closely with you in particular on this program. It's not, how should I put this, unusual for a CEO of a closely followed startup to say, we're thinking about an IPO or a listing in the not too distant future. But give us some of the background context of why that conversation came up.
Sure. So this is something that he's kind of hinted at before, but this is the first time he's really outlined perhaps in the next 2 years. He pointed to the fact that the company is pretty much a standalone business at this point, has hardware, software, has accessories, apparel, its own proprietary technology. And he said that it's really gotten to a point where they can move forward. And, he raised the question, if you think about a big company that really owns the idea of personalized health at the moment in the public space, what comes to mind? And he said Whoop is the company that he wants people to think of when the time comes.
I do feel like the health and gadgets in health offering has just got ever more competitive, though, throughout Will Ahmed's journey. Talk us through what the product roadmap looks like for that couple of years time frame.
Absolutely. Yeah. To your point, a lot of companies now are really stepping it up, doing a lot of the same type of features and type of results and data. But to your point, as far as product roadmap goes, one of the areas that a lot of companies have yet to master is the idea of continuous glucose monitoring. A lot of these devices, they monitor your glucose levels. A lot of people with diabetes, this is something that they need to do. And the technology behind it is quite clunky. It's very invasive. It usually involves needles and the puncturing the skin. A lot of companies want to perhaps change the form factor. Whoop is one of these companies. They say that they are interested in not only taking that information and using it as part of its overall dashboard, but also to figure out a new form factor that makes it easier, more seamless, and is non-invasive for users. Another area is what he calls a health operating system. So basically something that you can come to and do a little bit of everything. And similar to how an AI model perhaps might predict the next word if you're using, a chat GPT or something like that, Whoop has its own AI models. And what it wants to do is to look at predictive health. So perhaps taking all the information and being preventative when it comes to heart attacks, strokes, and other things down the line.
Also, some ongoing conversations, therefore, with the US FDA. Bloomberg's Sam Kelly, you always bring us the greatest reporting. Thank you very much indeed. Meanwhile, coming up, AI energy needs. They're boosting interest in US nuclear energy, but when will the billions in investments pay off? We'll discuss that next. This is Bloomberg Tech.
Real quick, I want to go back to the story of SoftBank selling out of its Nvidia stake entirely. $5.6 billion stake now gone. This is SoftBank's US-listed shares down almost 6%. A somewhat delayed reaction to that news of 24 hours ago. But overnight in Japan, in Tokyo, those shares also dropping. And again, we're going back to a story we did well yesterday. But this isn't concern about Nvidia. It's just more about SoftBank and what it's up to. Karen.
Good reminder, Ed. Meanwhile, it's talking tech now. And first up, Nvidia partner Hyde, well, it's offering a rosy outlook for 2026, citing AI as its key growth driver. But the company reported a better than expected 17% jump in net income for the September quarter. Chairman Young Liu struck a tone of cautious optimism, saying the company remains very positive about AI. Plus, JD.com says it's notched record sales during China's Singles Day event, with a reported 40% jump in shoppers. Orders, they surged nearly 60% during the sale, defying concerns over weak consumer spending amid persistent deflation in the country. And shares of Infineon, well, they are soaring after the company forecast a return to growth for revenue in 2026, driven by global AI data center boom, of course. Bloomberg's Guy Johnson spoke with Infineon CFO Sven Schneider.
We just raised the guidance for our AI revenue for this year from 1 billion to 1.5. So we are more than doubling in this fiscal year, and it will not end in 26. We expect the addressable market for Infineon for powering the AI data centers in the magnitude of 8 to 12 billion. So it's a significant idiosyncratic growth driver for the company going ahead.
The AI boom has also led to rising demand for electricity and plans to build out nuclear power facilities to meet that demand. But despite billions in investment, hardly any of that power will be ready for a decade. Our nuclear energy reporter Will Wade here with more. That's the story, that's the reporting. Lots of investment up front, and you've got to wait a long time to get more.
Yeah, the thing to keep in mind about nuclear is that everything moves really slowly. You know, I mean, any of these power plants, they're major construction projects, so already that's a slow thing. And then it's nuclear, so you know that they are going to take their time because it has to be safe. So it's a very slow-moving industry. There's huge demand for it now. There's, as you know, there's amazing demand for electricity now. All these big tech companies, they want electricity yesterday. But what we're going to see in the near term is a lot more gas power.
That's so interesting. And just briefly, Will, we hear talk about SMRs, we hear talk about new nuclear, but it's actually retrofitting or it's old nuclear plants that are coming back online.
Yeah, so there's a push to reopen some of the nuclear plants that closed earlier this century. You know, I was tracking them for years, and more than a dozen reactors closed in the decade through about 2022, and we're seeing several of them getting restarted. They were way too expensive to operate when people didn't really value it, but now they are willing to spend a lot of money, especially the tech companies, because they've got these big, deep pockets. They can spend money for it. We may see the first one of those come online January, February, early next year in Michigan, the Palisades plant.
All eyes peeled on your reporting. Will Wade, it's always great to have you on around nuclear. Meanwhile, coming up, AMD hopes to alleviate investor concerns, predicting accelerating sales growth over the next 5 years. More on that data center story next. This is Bloomberg Tech.
Welcome back to Bloomberg Tech. AMD is probably our big story and mover of the day. Best performer, both in terms of percentage gain and points on NASDAQ 100 and the Philadelphia Semiconductor Index. The story is really clear. At its Investors Day, it says top line overall 35% annualized growth over the next 3 to 5 years. But in that key AI data center category, 80% CAGR over the same time period. And clearly, investors like it, that 10% gain. It's basically biggest jump in about a month. GlobalFoundries is a US-based contract manufacturer of chips. It reported pretty strong earnings, actually, in the quarter just gone, but the stock down 6%. I guess mixed feelings, a high bar quarter, that kind of thing. But right now, with the effort of this country to re-onshore manufacturing of semis, we tend to take a close look at it. And then at the index level, we were talking about this earlier in the program, Caro, where AMD is probably artificially boosting a little bit the picture on the stocks right now, which is up 1.6%. But as we discussed with some brilliant guests throughout the show, government shutdown, the big E for earnings next Wednesday of Nvidia, those are probably things that we're bracing for.
Meanwhile, though, the AMD story is all about data centers, isn't it? And we've got yet more breaking news on that front. Meta shares, they're currently off by 2.7%. But this is as the social media giant is also planning to spend yet more money, more than $1 billion on a new AI data center in Wisconsin. Now, the announcement actually confirms Bloomberg's reporting from April about the plan. Let's get a reminder on it. Kurt Wagner joins us, who covers the company and almost feels a drop in the bucket of what the ultimate capex that Mark Zuckerberg is currently saying he's going to spend. But this is big for Wisconsin.
Yeah, it's big for Wisconsin, and it's a sign, Caroline, that this is just a snowball that continues to roll downhill in terms of AI infrastructure for Meta, right? We're now talking about data centers in Ohio, in Texas, in Louisiana, this one in Wisconsin that they just announced this morning. And so these are, projects that aren't even going to be really online and operational for several years. It just gives you a real sense of how much this company is betting on the future, betting on AI, and wanting to control this stuff themselves, right? Not necessarily going out and paying another tech company to use their data center, but really trying to own that infrastructure themselves.
That's where I wanted to go. So the headline right now is a $1 billion data center in Wisconsin. But the bigger figure is $600 billion, as Caro pointed out, over a period of years. Meta is not a hyperscaler. It's a technology company, social media focused, that also has an AI lab within it. Just explain why Meta thinks the best approach is to build its own infrastructure and have its own compute available to its teams internally as much as anything else.
I mean, my read on this, Ed, is to go back well over a decade ago when Meta really missed out on the mobile phone, right? And Mark Zuckerberg has spent now years and years and years reliant on Apple and Google primarily to distribute his products to his users. And we see this with, I think he regrets that. He's talked about regretting that. He's talked about the challenges that come with being reliant on another major tech company. And so we see what they're building around their own hardware in terms of AR and VR with glasses, where we see what they do around their own data centers. I really think this is very much a control thing. This is something that the company has been burned on in the past, if you ask Mark. And, they have a chance to control their own destiny a little bit with this AI infrastructure. And so I think they're leaning into it because of that.
Kurt, what happens next with Meta, right? They have these big projects, like there's this map that people show on the social medias of Meta's data centers occupying New York City in Central Park. Just give the sort of headline summary of their total ambitions.
Yeah, so you mentioned that's the data center in Louisiana, this one that could be as large as 5 gigawatts of power and compute. Ultimately, I think this is a company that, as we've talked about, is building several different data centers in order to spread this out. But I think the big thing for them, quite frankly, data centers aside, because those are still a few years away, they need to show that all of this talent that they spent billions of dollars on over the summer, these AI researchers and engineers, are going to deliver a world-class model. And so we will see that at some point, I imagine, in the next 6 months or so, where they will come out with a new model that they need to be on par with, OpenAI and Google and other top-class models to sort of show that it's not just building the infrastructure, but it's actually capitalizing on that talent and having a product to deploy to people that sort of reflects this investment on infrastructure. So the data centers are years off. I think more urgently, the pressure's on them to deliver a real world-class model here in the next 6 months.
Bloomberg's Kurt Wagner. Thank you very much. Let's get back to that AMD story. Shares absolutely surging, up almost 10% over the course of the day. That shows the trading over a couple of days. It sees accelerating sales growth over the next 5 years, driven by strong demand for its data center products. CEO Lisa Su updated investors on AMD's long-term outlook amid rising concerns of massive spending, some of which Kurt just outlined. Let's get to Bloomberg's Ian King, who leads our coverage of semiconductors. Clearly, this is a positive market reaction to AMD saying, here's what we see for the next 5 years. But that 80% CAGR, compound annualized growth, for the data center business. That's the headline, really, isn't it?
Yeah, I mean, there were a lot of headlines, a lot of numbers, and if you actually look at what happened, as they were speaking, the stock really didn't do very much. Then after hours, when the management were on stage and were being questioned, they put in a strong performance, and that's really when the stock started to pick up, and that's what the analysts and investors have reacted to, really.
Was enough articulation given by Lisa Su as to if OpenAI is good for the money longer term? She was asked a lot about some of these nervousness about these circular deals, about an AI bubble in other kind of words.
Yeah, I mean, you're right. She was asked about that, sort of talked around it. Then the analysts were like, no, come on, you've got to help us out here. And what she said really was, look, if everything happens as though it is laid out, as we get the users, the amount of models deployed and everything, the money's going to be there.
Real quick, the money going to be there. I believe Lisa Su was asked by some of the analyst community about the relationship with OpenAI, and they posed the question that we tried to some weeks ago when she was in the seat you're in. Is OpenAI good for it?
And she said, yes, don't rule them out, was her strong sort of retort to that push.
Ian King, we love it. Thank you very much. AMD on an absolute tear. Meanwhile, coming up, autonomous military vehicle startup Forterra just topped a $1 billion valuation. We'll talk to the CEO about the technology and the plans for its new funding next. This is Bloomberg Tech.
Startup Forterra has just closed a $238 million funding round that raises its valuation to more than $1 billion. Forterra's autonomous technology is used for battlefield vehicles that can operate individually or as a swarm to conduct surveillance or to carry items such as missiles. Here to discuss, Forterra CEO Josh Araujo. Josh, you join us from the Web Summit in Lisbon. Thank you for being here on Bloomberg Tech. I want to bring back some of that video of the technology, and we'll get to the raise, but just explain the autonomous system, the payload, and the swarm effect that we were just discussing.
Yeah, so what we're providing or really enabling is the use of any vehicle to carry any mission capability into combat in support of our men and women who are serving our country. So you think about, a lot of investment in defense tech has happened in many other domains, space, air, maritime. But really where the wars are fought and where wars are won are by the men and women on the ground doing the hard, dangerous work of our ground combat forces. So this technology is really, in support of them. It's what gets us excited, gets us up in the morning, is to go deliver, really mission critical, life-saving technologies that takes them out of harm's way and allows them to accomplish those missions really from anywhere in the world, and particularly from a much safer position than riding in that vehicle.
The $238 million Series C is split between equity and debt. What is it that you need the funds for in scaling and deploying your technology to the battlefield?
Yeah, so if you look at the priorities for the Department of War, and Secretary Hegseth had a really great speech last week. I've had the pleasure to be there. Really what they're indexed on is speed, scale, and capability. So how do you get more capability into the hands of warfighters faster and at scale? So what this funding is going to enable us is really to do just that. Everything from acquisitions and M&A. We recently acquired Gotenna, which really brings more capability tightly integrated to the warfighter. We're using to invest in additional capabilities. If you look at these vehicles on the screen, those are now mobile data centers with comms, compute, sensing that are now fully distributed on the battlefield. We'll deliver more than 200 systems into operational and combat environments this year. So it's how do we take more capability and leverage that compute, comms, and sensing at the edge to bring additional payloads, additional sensing, additional firepower, and really help those missions close for those men and women that are out there defending our country.
Josh, let's just talk about the underlying technology, the innovation that you've brought here, because you're kind of outfitting these existing vehicles with your own sensors. How are you working with partners, and what is it that you brought that no one else really had?
Yeah, I think it's our ability to work with best-in-class capability, best-in-class partners. So traditional defense primes, they are excellent at building vehicles at scale. So we can take their capability, made it with our technology, which is really the compute, sensors, the autonomy software, leveraging the latest and greatest in AI, to enable those vehicles to do really complex missions. And it's not just, hey, I have a vehicle that can drive point A to point B safely. It's how do I have that vehicle or system really close the gap for an entire mission, whether it be a mine clearing mission, a ship interdiction mission, a resupply mission, and have multiple vehicles coordinate together where that would otherwise be a human doing that. So that requires a pretty unique insight into how military operations work on the technology that's needed to enable that. And so it's really working with best-in-class partners. We want to bring the best-in-class of defense tech, the defense primes, and then help integrate those into a cohesive system that really serves that, again, that 18 to 25-year-old who's out there, on the front line, standing there for our nation's defense.
You've been building this business since 2002, Josh. And I just want to get your context on how much has changed just in the last few months, say year, because we're on track for a record amount of defense tech investing. We've got, as you talk about, Department of War really thinking about bringing on startups. Does that feel seismically different?
It seems it's a lot has changed, but if you look at back when the company was founded in 2002, the threat that was really facing, pre 9/11 was near peer competitive threats, tank on tank battles, and autonomy and robotics were looked at even back then on how do you deter a near peer conflict, how do you prevent the next large scale warfare from happening, and that's really through robotics and autonomy. So you fast forward to today. We're now several years into the Ukraine-Russia conflict. We're looking at tensions in the Pacific theater. And again, we don't have the size of the military, both in terms of distance and space, to go occupy and deter and project the firepower to deter the next conflict. And so it's just, what's old is new again. It's how do you leverage capability and technology to do that? I think we have the benefit of today that we didn't have in 2002 was very low cost, very capable compute, orders of magnitude more compute that's available to do this technology, sensors, an ecosystem of technology providers that are focused on the defense industry. And if you look at how the defense industry, and Secretary Hegseth said it himself last week, is we have to get back to the rapid innovation, rapid deployment of capability at scale. We used to do that back in the World War II and beyond. We've lost that along the way, and that's really that emergence is coming back, which is exciting.
Josh Araujo, Forterra CEO, joining from Lisbon Web Summit. We appreciate it. Thank you. And coming up, investors eye AI to help Cisco reach .com levels. We're close, about 13% off of those numbers hit back at the beginning of the century. This is Bloomberg Tech.
Cisco reports earnings after the closing bell. Investors are watching for signs of gains from its AI investments, though some on Wall Street remain wary it will ever reach its .com era peak. Despite being pretty close, Bloomberg's Dina Bass joins us. That's kind of been the story with Cisco for a little while. Back in the day, it was the big technology company, and present day, we're kind of waiting for it to get involved and see benefit from all the things that others are pulling ahead in. Is that a fair preview?
Absolutely. Look, when I started as a reporter more than 25 years ago, it was right around where Business Week dubbed Cisco one of the four horsemen of the internet era. And, those horsemen all to varying degrees ran out of steam. Cisco's trying to use AI to relitigate that and to get back into a leadership role. But when you compare it to some of the other the other AI bets, the other AI companies, it's what their forecast increase in revenue and profit is quite a bit more modest.
You go to August when it had its fiscal fourth quarter report, and they talked about the $1 billion that they saw in the AI sales coming from fiscal 2025. How better can they articulate what they're providing in the AI ecosystem right now, Dina?
Investors probably want to see just something that's a little bit more sustained and just, continued winning deals, continued development of the products to capitalize. What they've basically been doing is, redoing their networking products, a bunch of their software to really take advantage, particularly on the networking side, of the opportunity to connect server racks, to connect, data centers in between different data centers to better position those products for enabling AI workloads. But, that's a competitive space. That's a space where Broadcom plays as well, and where Broadcom is definitely better known. So it's really kind of a, show me consistent performance, consistent deal winning, and a consistent roadmap of products that are going to go where the AI market, isn't not just now, but will be in the future.
And show me a return to the highs in the $80 price tag that we saw back in the noughties. Dean Abbas, we thank you so much for all things Cisco. And look, Cisco is aiming at AI data centers. We're just talking about it. Kim Forrest, Boca Capital Partners CIO, says actually the build out of a data center will take a lot longer than Wall Street thinks. You're joining us now on the theme of the day, I think. It has been all about data centers, whether it's 50 billion coming from Anthropic, whether we're thinking about Meta continuing its focus in Wisconsin. But why do you think it's too much too soon from the Wall Street's perspective?
Well, for a lot of reasons. Living in a virtual world, as most of Silicon Valley does, it's really hard whenever they have to, go out into the real world and do physical things. And that's what we're talking about with data centers. We need power. We need really kind of exotic. They're kind of boring buildings, but they need to be very uniform, and there's only certain kind of people that can build them. And then we have the demand. So I've seen some reports, maybe on Bloomberg, about how some data centers that are already established are having problems, selling their capacity. So we have a lot of physical world problems. But I think my biggest thing is I'm not a believer that we really need all these data centers. I think human beings are incredibly smart and are going to work around what we're doing now, which is the brute force method of training large language models. Okay. I believe in AI, just not AI as it's presented right now.
So, Kim, there's the rub, right? Because you're not just saying that we got utilities issues, power issues, supply chain issues. You're saying we're going to innovate ourselves out of that. Are we going to the United States, or is it going to be Asia?
Well, right now it looks like Asia was first on track with the whole DeepSeek product that they came out with, right? We can quibble about if they unfairly used OpenAI to leverage, but they did leverage, and that's the most important part. They thought out of the box, as opposed to saying, we need to have the state of Texas be one big data center. I'm using hyperbole here, but they thought about how can we do this differently. And I think ultimately it's a good race between the US and the West in general and China about who is going to be able to come up with usable AI that doesn't, break the bank and cost every last dollar that Microsoft, Meta, and the rest of them have.
Kim, you've presented your thesis. So as an investor, custodian, fiduciary of your clients, how do you invest to support the thesis you've just outlined?
Sure. Well, I think we have to have many options, right? We do own some Nvidia, but we also own AMD, Micron, and believe it or not, Intel. AI is real, and AI is going to have very different
Kim,
needs.
sorry, may I just interrupt you? Like the AMD story today, the whole thing is predicated on the idea that they do participate in some massive data center build out. And you just said we don't need the data centers.
Well, there's going to be some data centers, but not as many as are planned currently. And I think that's the big thing, that even, last week's big cha-cha-cha in the world of AI was the Brad Gessner and Sam Altman interview, where, they're saying, where are you getting the money, Sam? So, there's a lot of concern about the whole theory of we need all of these data centers.
But surely,
I think
Kim,
over time we need them.
But isn't AMD currently trading in a valuation that is pricing in an enormous data center boom that will come to light? Or are you thinking actually AMD at this price is reflective of perhaps not such a significant build out?
And well, I am. And the other thing is whenever we discover that we don't need the brute force method, these chips will be instrumental in that, right? So I think we're going to deploy money. It's just differently than the way we're currently thinking. How about that?
Kim Forrest of Boca Capital Partners. As Caroline made the point of, this is the key topic of conversation today, and we're grateful for the robust conversation. Good conversation. That does it for this edition of Bloomberg Tech.
It does. You should go back and listen to the conversation. Listen to all of it. Don't forget to check out the podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. We're going to keep on banging that drum about the AI infrastructure build out. We give our cynics, such as what we've just heard from Kim Forrest, and we have those that think it is significant. Look, AMD, it's a significant move today, Ed.
Yeah, look, it's actually only its biggest jump in a month, but that was the whole point. It's them outlining growth tied to the build out of data centers, and what we're trying to understand is, will in the end we need all of them? That's what your markets look like. This is Bloomberg Tech.